Half the value of this unit is clearing up the bookkeeper versus CPA confusion, which is the most common confusion in this stage of the founder map. The other half is the Find Your Pros pattern itself, the evaluation criteria, the questions, the price band, the red flags, the hire trigger, and the bring ask discipline. The pattern repeats across the next 4 units of the module on the CPA, the attorney, the broker, and the payroll service. Learn it once on the bookkeeper hire because the bookkeeper is the lowest stakes engagement to practice it on. The bookkeeper does not file your taxes. That's the most common confusion in this module. The bookkeeper keeps your books clean so the CPA can file efficiently. 2 different people, 2 different scopes, 2 different hire triggers. Any candidate bookkeeper who tells you on the first call that she can also file your return is either confused about her own scope or operating outside her credential. Both are walkaways before the second question gets asked. Clear up the confusion before you start the evaluation because everything downstream depends on the 2 roles staying apart. 5 criteria score every candidate the same way, whether the lead came from a colleague's referral or a directory search. The first criterion is who the candidate already works with. Solo practitioners, consultants, coaches, not retail or payroll-heavy operations. The second is whether the chart of accounts shape for solo service businesses is familiar territory. The third is software fluency in whichever tool you've already committed to from Module 19.2. The fourth is engagement scope, specifically whether reconciliation lives inside the monthly fee or sits as an add-on. And the fifth is responsiveness, because a categorization error left to compound across 2 closes turns into a tax season headache. 5 questions get asked on the evaluation call in this order with this phrasing. The first one establishes whether you'll be a normal-shaped account or an outlier, what their typical solo service business client looks like, and the monthly transaction volume. The second names whether month-end reconciliation is in scope. The third is the cleanup question. 8 months of uncategorized transactions. What does the engagement cost? The fourth is the 1099-K with the IRS question, which surfaces real recent experience. The fifth is the categorization uncertainty question, call or flag, and the answer to that one tells you how the bookkeeper actually behaves when something goes sideways. Pricing for a solo coaching practice falls in a defined band, and both ends of the band carry information. $150 to $500 a month is typical. It depends on transaction volume, your software, and whether reconciliation is included. Below $150 is possible with bookkeeping apps and light oversight rather than full service relationship. Fine for very early stage practices. Above 500 for a solo coach means either the volume is higher than you realize, which is worth investigating, or the pricing model is wrong for the scope, and you move on. The band is not about cheapest. 5 red flags show up early enough to disqualify on the first call. Claims they can also handle your tax filing. Wrong credential or wrong scope, either way disqualifying. No clear engagement scope or pricing model up front, with vague language about figuring it out as you go. No experience with your software, with no plan for coming up to speed. Pushes you to switch software without explaining why. Cannot explain what a chart of accounts is when you ask the question directly. Any one of these and the next candidate is a phone call away. The hire trigger is the moment doing your own books crosses from manageable into late and error prone. Volume or complexity crosses your own tolerance threshold. For most solo coaches, that lands around 30 to 40 transactions a month, or the month you realize you won't catch up on your own. The dollar version. Any month where the time you spend on books would have paid the bookkeeper twice over. The timing rule that matters most. Hire before tax season, not during. A bookkeeper engaged in October walks you cleanly into March. One engaged in March is doing cleanup at a higher rate. What you bring controls how fast the relationship moves into normal state monthly work. Your accounts list, or the Module 7.2 template if you haven't built one yet. Software login, or the explicit decision to onboard together so the bookkeeper drives the setup. Prior 12 months of statements if cleanup is part of the engagement. Recurring subscription notes, because the bookkeeper cannot categorize a recurring $20 charge to a vendor name she doesn't recognize. And then what you ask, how they handle categorization uncertainty, what off-cycle communication looks like outside the monthly close, whether they flag mixed personal business expenses or just categorize whatever comes through the feed.